All right, let's get started. My name is Tyler Bollhorn. I'm the founder of Stockscores.com. Today's presentation is called The 3 Strategies for Profiting in the Stock Market. I'm going to go through different ways that I trade the market using some basic concepts that I will teach you today. So the itinerary for today is, in order for you to understand the strategies that I'm going to show you, I first need to explain some things about reading charts. So we're going to talk a little bit about how to read chart patterns, inflection points, trends, rising bottoms, abnormal activity. We're going to cover off those 4 things. There are 4 out of about 8 or 9 different concepts that I would normally teach when I teach people how to trade the stock market. So this is kind of an introductory webinar today. I'm going to give you a few things so that you can understand what I talk about when I go into the strategies. And I'm going to do strategies for 3 different types of traders. Strategy number 1 is the Stockscores Simple Weekly Strategy. This is one that is meant for the more passive trader, someone who maybe does 10 trades a year, doesn't really want to spend a lot of time in the market, doesn't have the desire to look at stocks every day or throughout the day. So this particular strategy, if you can spend 10 minutes a week on the market to manage your portfolio, it's I think the best one, and I'll give you a little overview of that and show you, demonstrate to you how we use the tools of Stockscores to apply that. Strategy number 2 is for the more active person who can maybe spend an hour or 2 during the day trading the market. It's called the Stockscores Simple Swing, and I will show you the tool that I use to do that. We use both Stockscores and something called TradeStation. Strategy number 3 is a day trading strategy. So for those of you who want to make a career trading the stock market, who want to spend all day trading in and out of stocks, that's what I do. It's a lot of fun, but it's also much heavier time requirement. But anyway, I will give you a little overview of that strategy. I'll talk quickly about the upcoming trader training sessions that we have later in November, a live class that I'm doing in November. And then to end the presentation, we're going to do some analysis of the overall market and discuss where is the market going, where do I see opportunities, where do I see things to avoid, and just give you a general overview so that you can go away from today's presentation with a sense of maybe some changes you might want to make in your portfolio based on the outlook for the market. So I'll sort of discuss why I believe the stock market is going down. I talked about that on Money Talks today with Michael Campbell. And I'm going to explain just how I did the analysis to arrive at that, because obviously on radio you don't get to show things, but in a webinar like this I can show you graphically why there is a problem with the market. All right, so let's begin with the education component. We're going to talk very quickly about some aspects of reading charts that you need to understand in order to analyze stocks. It's all with this very basic concept, which is an inflection point. All right, so this is kind of boring stuff, but we need it so that we can understand the strategies. The inflection point is really the building block of chart analysis. So you can really predict the future direction of stocks and markets by understanding how to read charts. It's something that's very often done poorly, and it doesn't have to be complicated. It can be kept very simple. And I think the simplest starting point is this concept of inflection points. An inflection point is essentially the peaks and valleys that occur on a price chart. So when we talk about a stock chart, we're really talking about a visual history of where a stock trades over time in terms of price. So, you know, a stock might start down here at $10 and it could meander its way higher and go up to 15 and then kind of roll over and head down. Maybe it goes down to 12. Then it stops going down, and over the next few weeks it goes up again. It goes up to 18 and then maybe goes down to 15 again, goes up to 16, and then starts to go down again. Okay, so that would be how a typical stock chart might look. Well, on this chart we have inflection points. An inflection point is anywhere that price changes direction. So you can see that this little mountain top here is an inflection point high. This is an inflection point low. Here we have another inflection point high, inflection point low, and inflection point high. Pretty simple concept, but so important in understanding what the mood of the market is and where price is going to go in the future. So I'm going to explain how we use those little inflection points to analyze a stock or a market and predict where it's going to go. But for now, all you need to understand is the simple concept of inflection points. Where's the highs, the peaks? where are the valleys? All right, moving along, let's take a look at a real stock. This is the one we're going to use for my examples today. And this particular stock has a number of inflection points. You can see there are, let me just get my little pen drawing tool out here. And here is a top. Here is a major little bottom there. Here's a price peak. Here's a price valley. Just look for peaks and valleys. There's a peak. There's a valley. There's a little valley there. There's another little peak there. Another one there. So anywhere you see price stop going up and start going down, or stop going down and start going up, you have an inflection point. All right, we can find all kinds of them on this chart just by looking for peaks and valleys. All right, so hopefully everyone understands this pretty basic concept. You're probably saying, well, how the heck does little points that you draw on a chart allow you to predict where a stock is going to go? Well, let's start putting them together. I'm going to teach you 3 elements of chart patterns. I teach in my courses 6 or 7, and these are 3 that we can focus on today because they're relevant to the strategies I'm going to show you. So those elements are price trends, rising bottoms, and abnormal activity. All right, so trends, rising bottoms, and abnormal activity. Now let's jump back to this chart and let's look for those. Now we're going to begin by highlighting inflection points that are rising over time. So let's just look for all the little bottoms on this chart and highlight them as inflection points. Now if I wanted to, I could draw a line across those, and it could be almost a, and I apologize, I don't have a ability to draw a very straight line in this presentation, but I'm doing my best there. So that is an inflection point line, or a line across the inflection points that fits 4 of them, and it's what we call a trend line. All right, a trend line is basically a way to approximate how price is changing over time. It's a generalization of what is happening with price over time. All right, so anywhere that there is an inflection point low, we draw a line across it. Now we have a trend line. Now I could do that for tops as well. So let's highlight these tops here. And I could draw a line like this. And now I've got a downward trend line. So here we have an upward trend line, and here we have a downward trend line. You can probably see another trend line over on the right-hand side if we start with the inflection point bottoms, and it's a bit of an art. It's not going to always fit exactly, but you want to find the line that best fits the predominant movement in price over time. So there's another upward trend line. So we've got a downward trend line here, another upward trend line over here, and notice that, you know, in the course of a year for this stock, not even a year, the stock goes from $12 to $54, but along the way, it has some pretty big moves in both directions. It went from 12 to 46, and then it went from 46 all the way down to 20 before starting to go back up again. Now, as a trader, I want to take advantage of those price swings. If I can, you know, buy it down in here and sell it right about there, and then buy it back right about here, and still be holding it up here, then that's what a trader does. Okay, that's different than a passive buy and hold investor. Now, in this example, you would say, well, being passive buy and hold investor actually did pretty well, but you would actually make more money by being a trader simply because you can move in and out multiple times and take advantage of those price swings. So in order to do that, in this particular example, all you need to understand are those 3 concepts I talked about, which is abnormal activity, price trends, and rising bottoms. So let me erase these lines and we'll just sort of focus on all of them. All right, so the trends we talked about already. The next thing I want to talk about is rising bottoms. This is a low, okay, so price went down, then it started going back up again, so it established a low point there, but that low is higher than the previous little bottom. And this bottom here is higher, and then this bottom here is higher than the previous one, and this bottom is higher, and this bottom is higher. So what you can see on this chart in this period of time is that price was rising over time, and we had rising bottoms on the chart. That is a sign of optimism. That means investors are generally in a buying mood with this stock. And we know that because every time the sellers are strong and they push price down, they can't push price down as far as they had the previous time. Here they push price down for 3 or 4 days, but they really never test the lows that they established a few weeks prior. And here we push price down just a little bit, but it's a higher low than the previous one. So that tells me that the buyers are in control of the market, and that's the kind of stocks we want to own. Now the final concept I want to talk about is abnormal activity. Anywhere you see a price jump that stands out relative to the previous price history, that implies that investors got excited about the company's fundamentals, either positive or negative. Here's a big down day, so there the sellers were pretty aggressive. Here the buyers were aggressive. Now, how tall that price move is on that particular day is all relative to what happened before. So normally the stock traded in a very narrow range right there, and then one day it jumped up with some pretty strong price action, and that started this upward trend. Okay, so we look for abnormal moves up or down within a trend. And what we like to see are breaks from low volatility. So in this case, we have kind of sideways, boring trading here, and then an abnormal price move to the upside. Well, and notice that that abnormal price move to the upside is also from a rising bottom. So now we've got optimism coming in because this low here is higher than this low. You know, here we had an abnormal move to the upside, but this low was not higher than this low. And so the sellers were still in control at that point. So what we do is we define our trend line and we look for breaks of the trend from a rising bottom. So putting this all together, we want to find, in terms of what we call a downward trend line reversal pattern, we want to consider stocks that are breaking the downward trend line from a rising bottom, and it's better if it's also showing abnormal activity. So let's look at this chart one more time. You can see I've got a green arrow drawn on this chart. Why do I highlight that as a buy point? Because the stock had broken its downward trend line, it had formed a rising bottom, and it was making an abnormal move to the upside that told us that investors found some reason to get excited about this stock, that they were eager to push it higher. In that case, the stock goes from $32 to $52 in, I will call it 2 months. That's a really strong gain in a market that hasn't been all that strong. Okay. Now we can actually apply this thinking, and this is what we're going to do at the end of the presentation today when I talk about why I think the market is in a little bit of trouble right now. We can do the same thinking and just flip it upside down. Here's an upward trend line. There's a break of the upward trend line from a top that is lower than the previous top. That tells us that this was going to go lower, and that's exactly what it did. Over the next 2.5 months, this stock went from $36 down to a low of $18 before it started to turn again. So if you can imagine being able to buy here and sell here and buy back here and still be holding because this upward trend is still in place, that's what a trader does, and that's what I'm going to show you how to do with some strategies. So the first strategy I'm going to focus on today is what's called a position trading strategy. Position trading is longer term trading. It's holding stocks for weeks, months, even years. It's not day trading or swing trading. And it's a way for you to pick 10 stocks a year for your portfolio, but stocks that are showing signs that they want to perform well. You know, you can love the fundamentals of a company. You may know the story about a particular company really well and really think that that stock has great potential. But if you combine that kind of analysis with simple trend line reading, you can time the market much better and get in when the stock is starting to turn rather than sitting in the stock that's a dog for 6 months before it starts to turn. So this is what we're going to do with position trading. So I'm going to show you a strategy on Stockscores called the Stockscores Simple Weekly. We're going to utilize the Stockscores Market Scan tool, which is a tool available to members of Stockscores.com. The first thing we're going to do is set our default chart to a 3-year weekly chart, and then we're going to run this process as we would every week. This is something I like to do every Friday. And if you read my weekend newsletter, a lot of my picks in my weekend newsletter, which is free by the way, are based on this strategy. All right, so let's jump over to the Stockscores website. I'm just going to bring it up here. Now, the first thing I said we have to do is set our default chart to a 3-year weekly. So in the upper right-hand corner of Stockscores, there's a little box here where we can enter the symbol of any stock. So I'll enter the symbol Microsoft, MSFT, hit go, and it's going to bring up the chart of Microsoft. Now, I have already got this set to a weekly chart going back 3 years. But if it wasn't, I could just go to the Chart tab, and here you can see the interval I've set to weekly, look back period 3 years. You want to have your chart type set to quick, and once you set everything up, you just click on Create Chart, and it will establish that as your new default chart time frame. All right, so we've done that. Let's now go to the Market Scan tool. I go to Tools, go down to Market Scan, click on that, and I've got this filtering tool that allows me to go through every stock that trades in North America, looking for those that have certain criteria. All right, so bear with me just a moment. I just have to bring something up. There we go. All right, so we are going to run here the Stockscores Simple Weekly. Let's do it for Canada first. I don't know if we'll do it for the US or not. We'll see what we find with the Canadian market. So you can see now that there's some things highlighted in green, and I ran the report and it found 11 stocks that meet the criteria of that market scan. However, we still have to look through these charts to see if they have a good chart pattern or not. Now, I taught you one chart pattern today. That was the downward trend line reversal pattern. There's a multitude of patterns that I teach. I probably teach a dozen different patterns. So we're going to focus on that one pattern today, just so we don't get too overwhelming with the new knowledge that you're getting. So just as a sort of reference point, this stock does not have a reason to buy it today. However, if you look here, I'll draw some lines on this chart for you. So I'm going to use a little tool I have called Snagit. Snagit allows me to grab any chart and then draw some lines on it. So I'm going to do that for you just so you can see what I want you to see. So let's draw a line across these tops. Okay, so we have a downward trend line. And let's highlight the fact that this is a rising bottom. See how that bottom there is rising from left to right? We'll make this red. And we'll just draw the other bottom there. So now you can see that the stock made a low at 350. It went up. It came back down to 370 or so, but wouldn't go back to the 340 level. And so that's our rising bottom. And then right here, we had a break of the downward trend line. So that, just remember that this is a weekly chart. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9 months of downward trend. The stock had been trending down for 9 months. And then on the weekly chart, it broke the downward trend line. We could actually say it broke it there from a rising bottom. So that is a strong signal that that stock wants to go higher. It's exactly what it did. It went from, roughly $4.10 or so to a high of $6 before it fell back and broke its upward trend line in the July there. All right, so that's the kind of analysis we're going to do today as we go through these. So this one, I don't see any reason to consider it today. This is a similar situation. I think it's a great stock if you own it. I would not recommend you buy this stock right now. It's kind of the bus has left the station. But if you own it, good stock to own. But again, just do that simple visual analysis. Draw a line across these tops in your mind. And there you see a break of the trend. And this bottom is higher than this bottom. So that tells us that that stock had a good potential to go higher. This one did that 4 weeks ago. But the problem was the low at that point was not a rising bottom. So this low was not lower than this low. And so even though the stock has actually done okay since it broke its downward trend line, I would not have considered that a buy at that time. However, look back here. There you had a downward trend. There you broke the downward trend, but from a new low, so we don't care. But what about right here? Now we've built a rising bottom. Okay, that 650 low is a rising bottom. If I draw a line from the highs across these tops, I see that I've broken the trend line right there at the start of December of 2013, and look what happened, away it goes. So this is a very simple way to analyze charts. It doesn't take a lot of time. You don't have to be a rocket scientist. Just got to be able to draw lines with a ruler. So I'm going to go through these and see if there's anything that I consider good today. This one is pretty good today. It's probably the best one I've seen in the Canadian market on this run. If I draw a line across these tops here, I can see that I'm breaking that line today, just barely. And this low is higher than this low. I don't love this one because I think it's going to get stuck at 29, so I don't see great upside potential. I think it was a lot better, 3 months ago when it broke the downward trend line there, but at that point it wasn't really a rising bottom, I guess, so we wouldn't count that. Yeah, I don't think anything on this chart screams a buy. Right now, in a Canadian market that's really pretty ugly, this is one of the best looking stocks out there. So if you're really desperate for putting some cash in something, this is one that is worth considering, but it doesn't have great upside potential. It does have a pretty healthy yield. I believe the yield on this is around 7-8%. A little risky that won't continue because that's a pretty high yield, but that's one reason to consider it, is it's got a high yield and it does look more likely to go higher than lower. All right, this is another one of those good to hold, but not really a good buy at this point. And we got 2 more to look through. Don't see anything there that I like. Good hold, but not a good buy. And 1 more. All right, another one that's a good hold, but not a good buy. Now, if we took these charts back even farther, we could probably see the point when they broke from a good pattern. So here was a situation where the stock was trading sideways and then had that abnormal activity that broke it out from a low volatility range. That's another one of the patterns I'd like to see. So that was the time when that stock became a buy. I don't consider it a buy today just simply because it's gone up so much already. I mean, it's in 3 years, it's gone up 400%, more than 400%. So it's been an outstanding performer. All right, so that is the Stockscores Simple Weekly Strategy. Now, I do that every week. You can do it on the Canadian or US market. I could select Stockscores Simple Weekly US, run the scan, and I've got 89 stocks to look through. Same analysis. You go select all. You can view it in what we call a gallery viewer. So once you get good at this, you can do it a lot faster by cycling through these charts 10 at a time. Here's one. See, there was the downward trend line, there was the rising bottom, and there was the break from the rising bottom that broke the downward trend line. And that was at 350. Now we're up to 450, and it's only been 5 or 6 weeks, so 20-25% gain in a very short period of time. All right, so let's jump back to the presentation and move on to the next strategy. Strategy number 2 is a swing trading strategy. Now let me explain what swing trading is. Holding stocks for not typically more than 2 weeks, but not less than 1 day. So 1 day to 2 weeks, utilizing either the Stockscores market scan or some specialized trading analysis software. There's lots of them out there. I use something called TradeStation. I think it's the best one, but there's others, TC2000, NinjaTrader, eTrader, or eSignal, sorry. There's all kinds of them. TradeStation is, I think, the most advanced. It allows you to program your own indicators, and I'll show you that in a moment. You can, in this case, set your default chart to a 30-minute, 15-day chart. And most of the trade opportunities that come with this strategy occur in the first 1 to 2 hours. Really, most of them are in the first hour. So if you're limited in your time, let's say you have to go to a job every day, but you've got an hour when the market opens from 6:30 Pacific till 7:30, let's say, or 7:30 till 8:30 Mountain, whatever time zone you're in, you can run this process in that early part of the day and find probably 80% of the valid entry signals. As always, when we see an entry signal, we want to evaluate charts for breaks. Now, this strategy utilizes abnormal activity a little more than the last one did. So let's, first of all, change our chart time frame to a 30-minute, 15-day chart. So I pulled up Microsoft again, and I'm going to go down to the Chart tab. Now, just a note, I am recording this as a video, so if I'm going through this stuff quickly, don't worry, you will be able to watch it later and get a sense of how to do this. So I'm going to make this an intraday chart, and a 30-minute candle going back 15 days. Click on Create Chart, and that is now my chart time frame. You can see up in the upper left there it says 15-day, 30-minute chart. Okay, so I can pull up something that was moving up last week, which is the VIX, VXX. And there you can see a downward trend line, a break higher from a rising bottom, and then a gap up on the VIX on Thursday, and off to the races it went, $19 to $22. A real consistent upward trend on the VXX last week, and something that I think may continue over the next couple of weeks. So certainly a little bit overdue for a pullback, but longer term, not longer term, over the next week or two, I think the VXX will go higher. Anyway, that's the 15-day, 30-minute chart of the VXX. Now I'm going to jump into my TradeStation platform, because here I can, actually I'll jump over to this window here. I can also look at a 30-minute chart going back a couple of weeks. So this is the strategy that I use. Every morning I run something called my gainer scan in TradeStation, and it's going to find all of the stocks that are moving up. So I'll do this 30 minutes after the market opens. I then drop it into this screen where it calculates for something called action candles. Now this is going to take a little bit of time now because it's trying to look at 390 different stocks that potentially have action candles. So while that's calculating, I'm going to jump over to Stockscores just to make things a little confusing, and I'll show you how we do this in Stockscores. We go to Tools, Market Scan, and go down here to Stockscores Simple Swing, run the scan, and I've got 64 stocks to inspect. I would do this about 30-35 minutes after the open, looking for stocks breaking from rising bottom. So McEwen Mining on Friday's open, not bad. Didn't really have a strong price break, but notice the downward trend line was broken, had built a rising bottom. Pretty good potential that it will go higher in the next few days. I wouldn't say outstanding. Look at this stock here on the open on Friday. I'll blow this up here for you. So there you can see I can draw a line across these tops, and right there on the opening hour of trading on Friday morning, remember this is Friday's trading here, this is Thursday, Wednesday, these are 30-minute charts. So there we had a break up from a rising bottom, and just on that single day it went from 82 cents to $1.05. That's a 20-25% gain in just a single day using this strategy. All right, so that's how we do it on Stockscores. I should have everything updated over on TradeStation now, so I'm going to run over there. And these are all the stocks that made action candles on the open on Friday. So see this little pink dot here? So that's my own indicator. I programmed an indicator, well, I paid someone to program an indicator using the math that I wrote to look for stocks making abnormal price gains. And anywhere that I see a pink dot, I have an abnormal price gain. Then what I have to do is evaluate the chart to see if they have the kind of chart pattern that I want to see. Now I've taught you one pattern, which is a downward trend line break, and there's, you know, as I said, about a dozen different patterns I like to look for, but it all starts with the abnormal activity. It starts with the pink dot. So there we had the pink dot, and it was breaking a downward trend line. The bottom was rising. I'll draw some lines in here for you. You can see this bottom was rising there. And the downward trend line will draw as well, so I can draw that across here. So we broke a downward trend line from a rising bottom and starts this stock making a reversal pattern, starting to go up. Same concept we talk about on a weekly chart, except this happens much quicker. This is on a 30-minute chart, and this trade will play out over the course of 1 to 2 weeks, typically, sometimes 2 or 3 days. So it can move very quickly. And really what happens is it's stocks that have something exciting going on with their fundamentals, and they report that to the market, or the market hears about it as a rumor, and it starts the stock to behave abnormally and move into that quick upward trending situation. All right, so that is the Stockscores simple swing strategy, and it's for the person who wants to spend maybe 1 or 2 hours a day trading the market. The last strategy I want to talk about is a day trading strategy called the Stockscores Wave. It's a new strategy I have. It utilizes TradeStation or some other real-time charting program. It's not for someone who doesn't want to sit in front of a screen all day. I mean, it is a strategy for a person who wants to make a career out of trading the market. So I sit in front of a screen all day long. I get up at 4 in the morning. I'm in Hawaii for the winter, so 4:30 the market opens here. And I trade this thing all day long. The market closes at 11 o'clock where I am here. When I'm in my home, which is in Kelowna, British Columbia, then of course it's 6:30 till 1. You have to figure out where it is. Most of the trades will happen in the first part of the day, and then you just kind of ride them through the day. But this is a strategy you can do as a day trader to make a living out of trading the market. So our default chart time frame for this is a 2-minute, 3-day chart. And I have a little process that I run in TradeStation to evaluate these. So I'm going to go to my wave tab here. You can see this little wave right there at the bottom, and I'm going to run this strategy. So I grab my watch list. That's step one, is I build a watch list of stocks, and they're based on a certain criteria that I have. And that's all taught in the course material that I have on this particular strategy. And I then monitor these stocks for the right kind of pattern. And to simplify it, because you can't quite make it this simple, but to simplify it, we're looking for situations where you get a break of a downward trend line from a rising bottom. So I'm going to make this nice and big, and I'm going to draw a trend line from the top, and I'm going to show you different things. Okay, so at that point, we had notice there's blue dots on some of these candles here. There's a blue dot right there. You can see a multitude of them. I want to focus on any blue dot that breaks the downward trend line from the high. Okay, so you can see at this point it's breaking the downward trend line. Then I say, well, is it from a rising bottom? At that point, it isn't. Well, there we're breaking from a rising bottom, so that was good. Here we're breaking from a rising bottom. That blue dot is good. This blue dot here was not breaking the downward trend line, and it was not from a rising bottom. All right, so you have to pick the one that is your ideal entry, and there's some different rules that we use for this strategy, but I would use this one as a good entry point on the VXX on Friday. And so I would buy it at 35.24 with a stop loss at 34.52. By the end of the day, it had gone up to 37.49. And so, with $1,000 of risk on this trade, the profit was a little better than $3,000. Now I'm going to be talking a little more about day trading and swing trading in a webinar I'm doing on Tuesday this coming week. So if you have more of an interest in that, I will go into a little bit more in depth about how we do this. But it's pretty simple. I have built my own indicators for TradeStation that will ring a bell when there's a blue dot on the chart. And once there's a blue dot, I go and evaluate the chart to see if it has the right chart pattern. And then I do risk management to size my positions, all that sort of thing. And that's how I make a living trading the stock market. It is simple, but it is not easy. You have to get your emotions in check to be able to do this, and that takes some time. And you also have to know what the rules of the strategy are. So what I've done on Stockscores is built something called the Stockscores Education Center. It's an online learning area where you can learn my strategies, my theories, my methods for trading the market, whether you want to be an investor or an active trader. So let's jump over to Stockscores again, and this time we're going to go into the education area. And you can see here that we have all these modules. I can expand this to show all the different ones. These are all different topics for learning how to trade the stock market. So the foundation, well, there's getting started as well. The getting started ones are free. You can go there today and watch those videos. They're all free. The foundation one requires that you have purchased the foundation course material. And this is where you learn how to read chart patterns, what price channels are, how to know when to sell, risk management, how to use stop losses, how to scale into a position. You can see there's lots of different topics there. Each module has a written lesson, so I can click on the little lesson icon. There we talk about inflection points, which I taught you today. Once you have read the lesson, you might want to watch the video. So there's a little video link here where I can watch. In this case, it's about a 30 or 40-minute video that explains those concepts. Then we have an assignment, so you can make sure you understand the concepts by answering these questions that I've written for you. There's all kinds of questions there. And then finally, you can take a little test, a little multiple choice test to make sure you understand the concepts, and you'll get a grade for that module. Once you're done that module, move on to the next one. This will take you 1 to 2 weeks to get through everything, assuming you have a real life and you go to work every day. You can fit in an hour here and there. It's not a lot of work. I think it's pretty interesting stuff and fun, but it's something you have to be willing to put in a little bit of time and effort to learn those concepts. Now, the reason you want to learn those concepts is because once you understand these concepts, you're ready to learn my strategies. So we talked today about the Stockscores Simple Weekly Strategy. Now, I don't have a lot of time today, so I did a pretty quick overview of it. All of the actual rules and details of that strategy are taught, again, in a written lesson and in a video. So I can watch a video that teaches, just as I'm teaching in this webinar today. There's a video there which I recorded, which you just click on play and it streams to your iPhone, to your Android device, to your desktop computer, iPad, however you want to watch the video. As long as you have an internet connection, you can do that. So it's all there in the Stockscores Education Center. And I built that last year to basically take all the things that I used to do in live class. I used to teach classes across Canada, and I just realized that there were so many people that weren't in the big cities in Canada where I was teaching that wanted to learn this stuff. So I put it all online. Now the nice thing about it being online is you can watch these videos over and over and over again. There's no limit, there's no time limit. You know, if you bought my course 5 years ago, you can still watch these videos tomorrow if you'd like to. So all of that material is online. The process that you work through this material is you read my book, The Mindless Investor. You then do the foundation course material. That sets you up to learn my strategies. You may want to be an active trader, day trading and swing trading, so you're going to focus on those strategies. You may want to be an investor, so you are going to focus on the investor strategies. How to become a Stockscores investor? Just take the investor course. It's all online with the Education Center having the lessons, the videos, the assignments, the tests, and then finally and most importantly, the strategies that I've spent 25 years developing. You get access to our tools, which is the way that you look for stocks meeting the requirements of the strategy, and as my student, you get support from me. So say a year from now, you're applying the Stockscores Simple Weekly strategy and you have a question about how to apply it, you can email me and I will answer that for you. For those that want to make a career out of trading, maybe part-time or full-time, the Active Trader course is the way to go. And that, very similar, online learning with the lessons, videos, assignments, but instead of focusing on strategies that are for position trading, you're going to focus on day and swing trading strategies. All of that material is in the Stockscores Education Center. You can watch it as often as you like. However, once or twice a year, I add to the online learning with some live training webinars like I'm doing today, but much more in depth. So the way that works is on Saturday, November 28th, I'm going to do a 3-hour overview of the foundation class. So as I said before, I used to teach in classrooms. I would have a room at the University of Calgary or Simon Fraser University downtown Vancouver, wherever I was, and I would teach this stuff for the day. And what I've done now is I've taken that concept and just done it with webinars, with webcasts, because it works just as well. You can still ask me questions. You can get the same learning experience, but I can do it with people all over the world. And so with students that I have now in so many different countries, it's just a great way for me to teach without it requiring a lot of travel, obviously. So Foundation Live on Saturday, November 28th from 9 till 12 Pacific, so 12 till 3 Eastern. Then, for those that do the investor course, from Monday to Thursday of the following week, each night, we are going to do the market scans together. We're going to actually look for trades together so that you can put what you've learned on Saturday into play Monday, Tuesday, Wednesday, Thursday for an hour. So after the market closes, we run our market scans on Stockscores, and I'm going to show you how I evaluate the charts, because what I find is that when people take my classes, they understand the concepts, but they're not fussy enough. And I'm going to teach you how to be fussy, how to, out of 30 stocks that you find in the scan, how to pinpoint really the best one or two. Now, for those who do the Active Trader course, so if you have an aspiration of being a trader, I'm going to actually trade live from Monday to Friday. It's going to be for the first 2 hours of the day at least. I may go longer. I just find most of the action is in the first 2 hours, so it gets a little boring after that. But if there's action all day, I'll trade all day. But you can actually watch me trade live. I'll be here at my desk in Maui, and I will trade the market. I'll tell you what I'm doing, why I'm doing it. I'll apply the strategies. I will slow down a little bit from my normal process because I want you to learn. And so there's a good chance I'm going to miss some good trades because I am slowing down and trying to teach you. But again, you're going to see me actually do what I do every day with real money. I'll say I'm buying the VXX here and my stop is here, I'm selling here. I'll explain it to you as I go through the day. So that is only open to those who take the Active Trader course. The investor sessions are open to anyone who does the Active Trader or the investor class, and then everyone does the foundation together. All right, so special offer. If you register for the investor or Active Trader course before November 26th, and you get everything set up before the November 26th, you will receive the Foundation live class on Saturday and those strategy application series for free. That's a $500 value. When I teach live, the courses are more expensive, and so I'm going to basically give that for free. So if you buy the investor course, you do the investor market scanning. You buy the active trader course, you watch me trade live. And that's all happening in the end of the month here. Several options. The foundation course is $995. The investor course, including the live training, because remember, you're not paying extra for that, $24.95. The active trader course is $34.95. And if you've taken one of these courses in the past and you want to upgrade, let's say you took the foundation last year and you want to upgrade to the investor, you can just log into Stockscores and it will show you the upgrade fee. It's basically the price difference plus $250. All right, so I'm going to do my market analysis in just a minute. And if you have any questions, now's the time to type them in, because I will answer questions and do my market analysis in just a minute. But before I do that, I'm just going to put up a poll here. This poll is anyone that has an interest in one of these courses, even a casual interest, just answer this question, yes or no. And what it allows me to do is, if you have an interest in the in any of the course material, I'll just fire you an email with some more details about it. So I don't phone people or bug people a lot. I'll just send you one email, maybe two in the next week or two, with more information on the course material. So if you have an interest in either of those courses, just say yes. And if you're one of my past students and you want to repeat the course, then I've actually already sent out some emails about that. The upgrade fee, if you've taken my course 5 years ago and you want to do it again, it's $195. So it's not very expensive, but it will basically give you the live trading for the week and all that kind of stuff if you are an active trader student anyway. So I'll just leave that up for a moment. There is more information on the Stockscores website about these courses as well. It's at stockscores.com/learn. There's actually a link on the home page for the course page. So if you go to stockscores.com and the sort of the upper part of the page in the middle, there is a link that you can click on that takes you to our Learn page. And there's 3 or 4 videos on that page that explain what the different courses teach in more detail. I don't like to go into too much detail in these presentations because it gets too long, but if you want to learn more about what the courses teach and involve, then I recommend you go check out that link at stockscores.com. I'm going to take this poll down in just a minute, so I'll give you another 30 seconds or so to answer the poll, and then I'll take it down, and then we can answer some questions. And I'm going to analyze the market for you to give you a sense of where I think the market is going and explain why on Michael's show today I recommended that you be pretty cautious with stocks and maybe even buy an exchange traded fund that goes up when the market goes down. So we'll do that in just a moment. All right, so let me take this poll down. Thank you everyone for answering. And if you answered yes, I will get you an email in the next couple of days with some details about the course coming up. All right, so let me just jump ahead here. Where are the markets going from here? That's the question. Let's go back to the Stockscores website. I know that some of you are asking me questions, and so I will try to answer those in a moment, but I want to do the market analysis first. I'm going to pull up a chart of the SPY, which is the SP 500 ETF. Now, first thing, notice that this is a 15-day, 30-minute chart, so that's too short term. Let's make this a daily chart. So I'm going to go into my chart tab, change this to daily, change this to look back period of 8 months, and click on create chart. Now all my charts that I bring up will be an 8-month daily chart. Okay, so what have you learned today? You've learned trend lines. You've learned concepts like falling tops, rising bottoms. You've learned abnormal activity. So let's draw some lines on this chart and show you why I'm concerned. First of all, if I draw a line across the bottoms from the low that was made in September, you can see that that line was broken right there 5 days ago. That was Monday, and that's when I put out an alert in my newsletter that I write saying market looks like it's going to go lower, trade the VIX. Okay, so that was the short-term buy or sell signal. That was on Monday. Now I'm going to switch this chart to a 3-year, actually make it a 5-year weekly chart. Okay, so this is a 5-year weekly chart of the S&P 500, and again I'm going to snag it using this little program I have called Snag It. And we'll draw some lines on this. So first of all, I'm going to draw the upward trend line going back to the lows made in 2011. Okay, we're going to make this green because I'd like to draw upward trend lines in green. So notice that the correction that we had in August, now remember this is a weekly chart, so it takes 4 of these bars to make a month. So going back to August, we had a breakdown that went down to that long-term upward trend line. Notice I've drawn that trend line across these inflection points through 2012. And notice also that although it went below the trend line, it didn't actually break it. Okay, we actually closed above the trend line on all those weeks. So that was encouraging because it meant that the bulls were still in control of the market longer term. Now, notice this past week, and this is the little red bar here where I'm trying to circle. I don't know if you can see that very well, but the last red candle on the right side of our chart, it is obviously red and down, but it's also from a falling top. Okay, so I'll make these red because red is a sign of resistance. So the high that we made, not last week, but the prior week, the high that we made that week was lower than the highs made in the summer of 2015. And that is basically telling us that this market is going to retest that long-term upward trend line. There is a very good chance that we will fall to that green line. I would say 70% chance that we will fall to that green line. And there is probably a 50% chance that we will actually break down through that green line. If we break down through this green line, so let's say that in 3 or 4 weeks we actually move down through that green line and close something like that, that would be a strong signal that this stock market is going into a bear phase. Now it hasn't broken it yet, so I don't want you to become long-term bearish until that happens. Right now, short-term bearish because the short-term upward trend line, which we drew on the daily, broke down, and that means we're probably headed down to somewhere in the 192 to 196 range. That's pretty good downside. That'll make some people get a little panicked, and I think that's how you want to be cautious in the near term. Okay, so that's the analysis on the S&P 500. The analysis on the Dow and the NASDAQ looks pretty similar. Let's take a look at the Toronto Stock Exchange now. T.XIU is the symbol I like to use for the TSX. Now here, let's make this a 3-year weekly chart. Here you can see that the sellers have actually been in control of this market for a number of months. All right, here was an upward trend line. We broke the upward trend line. We rallied back, just very similar to what's happening in the U.S. market now. We built a falling top. Okay, there was a breakdown from the falling top, so that's kind of where the S&P is now, and the market just hasn't done anything since then. And it went up a little bit for a while, but it never broke through to new highs, and now we're in that downward trend that we've been in since the spring of 2015. So this market has been in a bearish trend since the spring of 2015, and I can highlight this chart here like this and draw a line across that. Here you can see the downward trend line. Now what happened this week is we actually broke a kind of a short-term upward trend line there. So that tells me that this market is again in the grips of the sellers, and there's just no reason to be a buyer in general in Canada. You have to be very, very stock specific because the majority of Canadian sectors are weak. I wrote an article for Michael's Inside Edge newsletter service on Friday that talked about how all but information technology sectors in Canada are actually in a downward trend. And so generally in Canada, you want to be very cautious. And it's been like that for a number of months. Okay. All right. So that's just a basic analysis of the overall market. I think we'll take a look at oil and gold because Canadians are always interested in oil and gold. So there's a daily chart of oil. It broke through some support on Wednesday from a falling top. So there's a falling top there through this line of support. I think we probably retest the lows. Probably 70% chance we get down to the lows there. Looking at gold, GLD really sold off sharply, has actually come down to the lows and trying to bounce, but I think it probably will bounce short term, but again roll over, and I think gold remains in trouble. Look at the 3-year chart of gold and you'll see why I've been bearish on gold for a long time. What do we got? Rising bottoms or falling tops? Just look at that. And you can see that the tops consistently fall week after week. We just haven't had any rising bottoms. We had a rising bottom there, but we hadn't broken the downward trend line. We had a little rising bottom there, but the downward trend line was still in place. So, you know, you sometimes get little 2 or 3 week rallies in gold, which are very tradable if you're a short-term trader. But if you're a longer-term investor type, you should not be in gold, and you should not have been in gold since 2011 when it broke down from a falling top. There's your rally up, break down, falling top formed. See that falling top right there? Break of the falling top. That was the real strong signal to get out of gold. I know it doesn't help you much now, but I've been a bear on gold for a long time because of that negative pattern. Let me just show you the SP 500. I'm going to go back really far on the S&P 500 just to show you how tops tend to form. And it's a little bit hard to see because this is a monthly chart, so you'll have to take my word for it. But right here you have a break of the upward trend line. There's a falling top. And because this is a monthly chart, some of the detail gets lost. But there again in 2000 we had a break of the upward trend line right there. And it formed a falling top on the daily chart. You can't see it so much on the monthly chart. Right now we're flirting with that again. If I draw a trend line across those bottoms, I bounced off of it so far, but we've built the falling top. So if we fall down through 190 on the SPY, I think we're back into a bearish market. Now, fortunately, bearish markets don't last as long as bull markets, but you want to be cautious. You can make money in bear markets. You just have to trade either short selling stocks or trading the inverse ETFs. Don't think that you can't make money in a bear market. You just got to do what the market tells you to do. All right, so I'm going to answer a few questions now. Someone's asked me about UNG as a swing trade. It's pretty tough for me to do this really well because I don't know when, where you're asking me about, but I'll just do my best anyway. So do I see a reason to trade the UNG, which is the Ultra Natural Gas Fund, or United States Natural Gas Fund? So this is a ETF based on the commodity of natural gas, and I don't see a reason to take a trade there. I like that it's building stability for the last week and a half or so, but it's still in a downward trend. I don't see a reason to short it, don't see a reason to buy it. Next question, analysis on Valiant, VRX on Toronto. Let's pull that up, VRX. So you should be able to analyze this yourself now. I'm going to actually give everyone just a moment to look at this chart and try to apply what I taught you about upward trend reversals, about when you sell markets that are likely to go down, because I've actually taught you exactly where you should have sold this one, but I'll just give you a second to look at that. All right, so I'm going to grab this. Now I know that you haven't had much practice with this. Certainly when you take my course, we spend a lot more time teaching these concepts and it becomes easier. But let's draw an upward trend line. Now this is a trend line at that point, and we could draw another trend line kind of across those bottoms. Now, we get a break of this trend line right here, and the top is lower than the previous top. We got a break of this trend line right there, and that top is lower than the previous top. So the market gave you two pretty strong signals that Valiant was in the control of the sellers, or the sellers were getting motivated in August and September of this year. Both times the market broke the upward trend line from a falling top. Those are strong signals to sell. Now, would I sell it today? If you still own it, I certainly don't see a reason to buy it. I don't see a reason why it's going to go higher, because for it to go higher, it first has to build a rising bottom, and then it has to break that downward trend line. So it's got some work to do. So I would say this is something you want to avoid, and wait for it. If you like the story, and you know, this was the darling of the stock market at the first half of this year, but it's been the dog of the TSX second half. Until you see it break that downward trend line, build a rising bottom, and break up from a rising bottom, I would leave this alone. Next question, do you short sell stocks at all, or do I typically go long on stocks? I short sell. More so lately, I've been shorting. Again, I mostly day trade, but I shorted lots of stocks last week because that's what the market was doing, was going down. If you're looking at the big picture, you want to hold longer term positions, I actually prefer the index ETFs that are inverse. So you can, I talked about one on Money Talks today, SH. It goes up when the market goes down. So if you're a longer term, more of a passive trader, I would more recommend doing that. But you can short sell individual stocks. You can trade options on individual stocks with put options. There's lots of ways to make money from markets going down. Next question, what are your thoughts on the charts of Tesla and Baba? So one of the problems when people say, what are my thoughts, is I don't know if you mean as a day trade, a swing trade, a position trade. I'm going to assume you mean longer term, so a position trade. So on Alibaba, great upward run here, came up to resistance, got stuck. I've traded Alibaba a lot lately because it's been moving nicely. I think it's going to stall for a little while. I don't think I want to own this. I don't really see a reason to short it either. I just think it's a tough one to call. I'll day trade this a lot because it's quite volatile during the day, but if you're a longer term investor, I think you do. I don't think you do anything on Alibaba right now. If you own it, I'm not comfortable owning it. I think you want to watch pretty closely and dance close to the door on that one. Tesla. So is Tesla got rising bottoms or falling tops? Well, this top here is lower than this one. That means the sellers are in control. It's one of the reasons why the sentiment stock score is a measly 37. Let's take a look at a longer term 3-year chart of this. Longer term, it's in a sideways range. I would say long-term neutral, short-term bearish is my rating on it. It's going to kind of oscillate between 180 and 280. And yeah, it gets interesting at around 180 on the bounce off of support. But if it rallies up to 280 again, I'd be a seller. I own HSD on the TSX, so I assume it'd be the same analysis. Yeah, HSD is another ETF that, sorry, you got to put a T dot in front of the symbol for Toronto, so T.HSD. This goes up when the S&P goes down. It's priced in Canadian dollars, which is nice for Canadians. So this is another way to take advantage of market weakness. You can certainly buy this one. It is, I believe it's a leverage ETF. I think it's double leverage, so it does have some of that time value decay. If you want to understand how that works, just go on Google and Google for time decay or value decay in leveraged ETFs. Do a search like that, and you'll get people with videos that explain how that all works. Okay, next question. Thoughts on ZWH covered call? I'm not an options trader myself, so I don't consider myself an expert. I certainly know how options work, so I can give you a sense of that. So with a covered call, you're basically writing a call option against a position you have. So what I'll do is I'll give you my sense of where this instrument is going. This is a US high dividend ETF or bond fund or something. I think it's an ETF. I think this is more likely to go higher than lower, but until it breaks through 1920, I don't think it's got much potential. I think it's just going to kind of go sideways. So the idea of a covered call is you're collecting premium while you own something that's kind of dead in the water. And so I think it's a decent trade, but again, don't consider me an expert on options. My outlook for this thing is it probably goes sideways in the short term. I don't know how much time you have on your call option that you wrote. So if it's real long term, I think real long term it could go higher. But if you've got an option that's fairly short term dated, you're probably going to be in good shape on this. You collect the premium while you own something that's probably paying you, no, it doesn't have a yield. Anyway, it looks like a decent thing to hold longer term. Is there a way to scan for abnormal volume, particularly early in the day? Yes, there is. If you go to the market scan tool, we have something here called abnormal volume, and you can just do that. You can't do this until the market has been open for about 30-35 minutes, but it's a good way to find stocks that are moving early in the day, and that's one of the tools you get with the Stockscores market scan tool. So just on this UNG, the person who asked that question is saying, well, there was a break of the downward trend. You're right, but I just don't think it's got enough optimism yet. I'd like to see it break up through this $10 mark. Let me just make this a little longer term chart. Make this a 60-minute and make it go back a few more days. So let's just get the big picture here because I want to show you what I think might be the problem. Is the downward trend line looks like that. Now shorter term, the downward trend line looks like this. And so you could say, yeah, that short-term one was broken, but it's still in a longer-term downward trend line. If we jump over to Stockscores and look at the daily chart on UNG, it's still in a pretty significant downward trend. So, you might get a little bit of a bounce as some short covering happens in natural gas, but it hasn't broken the long-term pessimism. So that's something I would sort of take into heart is the bigger picture. So next question, hi Tyler, what is the best piece of advice you would give to beginner traders? The best piece of advice is to learn before you do. There's no barrier to entry in the stock market. It's a real problem. If I wanted to be a heart surgeon, let's say I said to you, you know, I hear you got some heart problems. I can fix that for you. I've read a book on it, and I think I can operate on your heart and cure you of your heart disease. You'd look at me like I was nuts. Well, there's people every day that go into the market trading without learning what they're doing. And they'll take, you know, money that they've worked really, really hard to save and essentially gamble it in the stock market without any knowledge of what they're doing. So whether you learn from me, whether you learn by teaching yourself, I mean, I spent 8 years teaching myself how to trade the stock market. Whether you learn from someone else, I don't care. Just learn how to trade. And even once you've learned, take time to practice. Trading from a theory standpoint is actually pretty easy. I can teach anyone my strategies and rules in a couple of weeks, but it takes practice. You have to overcome your emotional attachment to money, and that takes time. And as long as you are a normal human being, you will screw things up because you don't like to lose money. And traders, what we have to do is understand what our risks are and balance risk and reward. And that's a big part of what I teach. You have to learn how to overcome your emotions, your fear and greed. Those are all things that I'll teach you, but if you don't want to learn from me, that's great. Just learn from someone, because the market will beat you up, chew you up, whatever you want to call it. It gets pretty nasty. Next question. What about the US dollar? Please advise. Okay, so US dollar, big picture. Let's do a 3-year chart. Upward trend here. That really was what destroyed commodities. And then we had a little bit of a what's called a flag pattern, and we broke that 4 weeks ago. So 4 weeks ago, I put out a bullish recommendation, whatever you want to call it, on the US dollar. I think the US dollar goes higher, and I think that's going to make it tough on the world, because there's $9.6 trillion of foreign debt denominated in US dollars. So imagine you are in Germany and you owe money in US dollars, and the euro is going down and the US dollar is going up. What you have to pay back is actually higher to you. And that's happening all over the world because so much debt is denominated in US dollars. Then you add to the fact that emerging markets are often dependent upon commodities. Well, as the US dollar goes higher, it makes commodities more expensive. Why do you think oil has been totally pummeled? It's not just supply issues. There's a really, really strong correlation between the US dollar and oil, between the US dollar and gold. They are inversely correlated. So if these things are going up, if the US dollar is going up, commodity prices fall. I got an email, it was a Twitter feed actually just yesterday, about how commodity prices have been absolutely decimated in the last few years, primarily because of strength in the US dollar. So that deflation, another cause for concern in the market. And these are all reasons why I think we could see more of a pullback in the market. Someone's asking me about AYA. I will take 1 or 2 more questions, then I'm going to wrap up. I want to thank you all for joining me today, and I know that it's Saturday and you probably got better things to do than listen to me talk all day. AYA, I don't know if you meant on the Canadian or US market. So AYA on the US market is something I would absolutely avoid. Let's see if it's traded on the Toronto Exchange or not. I don't know if it is. It is, yeah. So Avaya Gaming on Toronto, I think, is a sell. It has broken down through support this week from a falling top. So more likely to go lower than higher. Doesn't mean that in the next 2 weeks it can't go back up to 26 before it rolls over. But if you're asking me, you know, looking out 6 months, I think AYA is lower. All right, so I'm going to wrap up. I think that's all the questions I had. If I missed your question, I apologize. You can always email me. Let me just throw up my my information here again. There is my email address, tylerb@stockscores.com. Follow me on Twitter. I'm at Stockscores. I put out some of my trades that I do on Twitter. I also post a video every week on YouTube. So I have a YouTube channel, youtube.com/stockscores.com, as you see there on the screen. And there's lots of great free content that I've put up on the internet that you can take advantage of. But certainly, if you have an interest in one of my courses coming up, there's a nice bonus where I'm going to teach you live, a little bit more of a question and answer that we can do that way. and that's a nice $500 free bonus if you register for my class before November 26th. So something to keep in mind. I've taught Canadians for 15 years how to trade the stock market, and I only do it once or twice a year now, but certainly we have one coming up in November. So I want to thank you all for joining me today. I hope that you have a great weekend, and as I like to say all the time, trade well. Good night, or good afternoon, everyone.